Welcome back. This video will be very brief and it's about the 50% rule. You will be focused on the daily chart in order to spot these 50% retracements. As you take your trade, I will give you guys a perfect example from today. So today I took a short right around 8:30 in the morning, right after the news came out. So we saw the market structure break right here on this leg. I took out all these previous lows. I waited for the retracement. I went in short and I took my first profit at the measured move. And then I left two positions running. And how can I determine when to take profit? Well, a good hint is knowing that we do have the 200 EMA right here, but also using the 50% rule. And the 50% rule basically indicates that whenever there is momentum going one direction, the next day, the candle will try to retrace 50% of that move before continuing to go on that original direction. So for example, yesterday we broke market structure to the upside. So it's a very, very bullish environment at the moment. So today we had to get a small pullback and it was exactly a 50% retracement of this current wick. So and today is actually Friday. So I'm assuming that by Monday we'll get another small retracement to fill this wick and we will continue to be bullish and test out the 200 EMA and continue ripping, which this pattern here that is forming is a tide shift. So let's look at some other examples. Here's another great example. This candle here, it broke the structure temporarily to the bullish side. It penetrated the 14 EMA. And also the next day was also bullish. And then what happened here after it hit dynamic resistance from the 50 SMA, we had a retracement, and this candle here is just about 50% of the move down from this two wicks right here. Let's look at more examples. Right here as well, momentum was bearish. So you see the bearish momentum. This candle was a quick retracement, filling up 50% of this previous wick. Here, the same thing. We see the full body. This day here, it was a retracement. So just about 50% of the body. And that is actually how it works. It's a very simple method. And in reality, it just helps you gauge where to take profit. Also, if you look at the smaller time frames, like the 4-hour, for example, you'll notice that it was also a 14 EMA bounce. So there's a lot of ways to identify when to take profit, but this is also one of the best ways since you're looking at the biggest picture instead of just looking at the 1 hour or a measured move from the 15-minute. Thanks for watching.